Hello everybody and welcome to this video on Q4 by Enphase. Enphase is a stock that I used to own and I sold it not because of a lack of belief in the long-term thesis. I sold it because I needed tax loss harvesting, and unfortunately Enphase was the best candidate for tax loss harvesting. I am eager to get back into Enphase. I just don't know when. So I haven't lost conviction in the stock, but the stock right now is going through a valley of despair, as solar does. The solar industry is weird. It goes through these epic cycles of booms, and then you will have maybe half a decade of a valley of despair. I believe it has entered another valley of despair, although I don't think it's gonna last half a decade because it's been in that rut for about 2 years. So we'll see how much longer it's gonna last. So let's talk about the revenue. The revenue is sort of bouncing back, but not really. I mean, it bounced back a little bit from the low of March to 2024. You may remember that was an inventory issue. The installers had ordered too much, and so Enphase stopped shipments in order for the inventory to quote-unquote right size. It's right-sized now. The inventory is right-sized now, and now the revenue is going back up just a little bit. You saw September was 381 million. Today, let's call it 383 million. So the revenue is kind of flat. Unfortunately, the Q1 guidance, and they didn't guide for the whole 2025 year. They only guided for Q1. They're telling us a range between 340 and 380. So they're guiding down because they did 383 in December 23, so Q4 2024, in December 2024. So Q4 2024, they did 383. They're guiding down because the top of the range is 380 here. So again, the valley of despair is there. It's alive. So let's talk about the business. Let's go over some of the takeaways of the call. They have done a very good job at shifting the manufacturing to the US. In fact, in the capacity of 7.25 million microinverters, 5 million of that capacity is in the US right now. These operations are not operating at capacity because the demand is weak. The batteries are not doing too well. A lot of people were hoping for the batteries, but these batteries, A, are expensive, and B, this is where you have direct competition from Powerwall 3. And, I would have to believe, although Tesla doesn't detail that, I would have to believe that the Powerwall 3 is taking away some of those battery cells. But one good thing for batteries is that now in California, NEM 3, which is kind of the standard that the whole USA is moving towards, NEM 3 in California represents 66% of the installs, and out of those 66%, 45% have an attach rate of batteries. So roughly half of the new solar installs have batteries. This is high, but this is still slightly lower than what Battery was expecting. Battery was saying 4 out of 5 potentially installed in California would have batteries. Well, there's an attach rate, but once again, is the attach rate higher for the Tesla Powerwall 3? That is one slight concern. Unfortunately for Europe, the revenue is down 25%. There's been a lot of changes with the utilities in Europe. Netherlands is one area that comes to mind. In Netherlands, demand remains weak. The business environment in the region in Europe is challenging, and so it's tough to sell, $10,000, $20,000, $30,000 installs when you have a tough, challenging environment. It's all about the rates. I'll get to that in a second. Now they are continuing their expansion in Europe, right? There's countries where they're not really there, like Italy, Spain, Switzerland, Austria, Poland. They're not really there, and they're also talking later in the call about their entry to India, to various countries in Southeast Asia, and to Japan. So this is a company that is still setting up to be a global leader. They are not giving up on their growth. They are continuing, but they're building. Bear markets are for building. This is a bear market in solar, and so they are building, getting ready for the future. Battery called 2024 challenging, and it was challenging to say the least. But they're entering 2025 with efficiency. 2025 should be the year of efficiency for them. They still fundamentally believe in the business, in the product. They believe that, of course, solar energy is the future, especially within the context of the grid, within the context of balancing the grid, helping the grid getting access to energy, and we're going to need much more energy down in the future with AI, and that's also my thesis. And so they believe that they could have gradual revenue growth throughout 2025. So I don't know what that means, because if you start Q1 25 at 340 million, even if you grow revenue by, say, 5 million each quarter, you still end up roughly down for the year. So I expect a flat to down year in 2025. The analysts expect the year down about 5%, which is the number I'm going to use in my spreadsheet. Two more things to say about the call. Analysts, they don't appear to be too fearful about the IRA benefit going away. This was also my initial assumption. Trump may not like IRA, but he likes manufacturing, and Enphase really played the game of manufacturing. This has an unintended consequence, is that a lot of the chatter about tariffs really hasn't impacted Enphase that much, because now the microinverters are made in the USA, and they're working on those local content requirements, trying to get as much local content requirements as they can in the microinverters. The battery is another question, but the battery is still very small for their business, and even their next gen gallium nitride IQ, that will be the IQ 10s, for example, microinverters, the next generation, more powerful microinverters, these would still have American suppliers for the USA, and so it's still in development, but that's also going to be the next wave of growth, these gallium nitride IQ inverters, which I am excited about. But at the end of the day, I can be excited about the technology as much as I am. It's all about the sales, right? Are they selling? Are they actually selling? And unfortunately, this is a story of poor sales for Enphase, unfortunately. And this is not their fault, in my view. This is all about the rates. But anyways, let me move on to the valuation. The valuation, I don't get an enterprise value over gross profit or revenue growth for Enphase, because the revenue growth is predicted to be minus 5%. If I put like a 2 or a 3% in there, I would have something in the double digits. So it would look like a nosebleed valuation. Unfortunately, even though the EBITDA margin went up 1%, that growth is hurting. So the rule of 40 is nowhere near there. It's at 8 right now. And the business is still trading at 7 times forward revenue. And it's over gross profit is trading 13 times, and the trading over cash flow, over EBITDA cash flow, we're at a 52 times. And so this is now looking like an expensive company, and that's because the revenue growth has stalled, and that's very, very unfortunate. That's why I sold it reluctantly. But the growth stalling is really my big red flag in growth investing. And I got into the stock. The growth was through the roof. You may remember 2.5 years ago, the days of this channel, the growth was through the roof. But unfortunately, we had an enormous macro storm. It's all about the rates, and I didn't think the rates would stay this high. I still can't believe the rates are this high. I simply can't believe it. Something's gonna break in the system with rates this high, and they're gonna have to take them down. And when they take them down, I think is when Enphase is going to shine. But the problem is most of these installs are financed. Very few people are paying with them with cash. And if this were a free market, I believe Enphase would be doing much better. But since these installs are financed, it's not entirely a free market. It's a market that's heavily decided by the rates. And so that's why I much prefer stocks now that are direct to consumer inexpensive products where the consumer really has a say. It's not about the rates. I still believe solar is a mega trend. Solar is the most logical thing in my view. I still believe most homes will have solar eventually. I mean, most family-sized homes have enough roof space to power themselves with just solar. And I still believe that is the technological revolution we're looking at. But right now, unfortunately, those rates are still too high. They need to come down for this stock to do well. And when they do, I want to get back into this stock. And how am I looking into getting back into Enphase? Well, I think that I've made this clear in my mind, is I'll get back into Enphase via the leaps. And so the key to me will be to try to buy this stock on a leap, right? Whenever it reaches that valley of despair. And so I don't know how low the price could go, but let's imagine we have some chatter, for example, about the end of IRA or some negative sentiment out there. If this is a stock that goes down even more, then you can anticipate the leaps being a really good price, and then you're buying the right to re-enter the stock at that low price of today, 2 years from now, right? In the case of a Gen 15, 709 days. That's how I'm hoping to enter back into this stock. I have not given up on this stock. I just sold it for tax reasons. If I didn't need the tax loss, I wouldn't have sold it. I would have still held it. But unfortunately, it's just the way it is. All of my technical videos about the business still stand. This is a matter of really the interest rates hurting that business, and really it's all about real estate too, right? Real estate is down right now. It's a crisis in real estate, and so this stock unfortunately is impacted. But I am still looking to get back in. So, anyways. This was not financial advice. This is not investment advice, and you really understand that this is not investment advice, right? And so this is entertainment only. I'm hoping you were entertained. Please like, please subscribe, follow me on X, follow me on Patreon. Thank you for watching, and have a wonderful, wonderful day.